Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories within company filings. And today we're diving into the latest shareholder report from DWS DWS Investments Fight Finds, a look at how their flagship DWS Small Cap Index VIP fund performed. This isn't just a dry financial document, it's a snapshot of where a chunk of money is invested, revealing trends in the market and how the fund managers are navigating it. We're talking about millions and millions of dollars here, and understanding where it's going is key to understanding where the economy might be headed. So what's the big picture? The fund's net assets are hovering around $397 million. That's a pretty significant amount of money managed by DWS Investment Management Americas Inc. Now let's talk about the different classes of shares. Class A shares cost an investor about $19 for every 10,000 invested over a 6-month period. Class B shares were a bit more expensive, costing around $33 for that same $10,000 investment. This difference is often due to distribution or sales fees designed to compensate those who sell the fund shares. Okay, let's get to the juicy part. What exactly are they investing in? The fund is heavily invested in common stocks, which make up a whopping 98% of its assets. Cash equivalents are a small 2%, and everything else, government obligations, rights, other investments, warrants, and even other assets and liabilities net, add up to the remaining 2%. It's clear the fund is all in on the stock market. Looking at the sectors, there's a diverse spread. Financials lead the pack at 19%, followed closely by industrials at 17% and healthcare at 16%. Information technology chunks in 14%, then consumer discretionary at 10%. Real estate, energy materials, utilities, communication services, and consumer staples fill out the rest of the portfolio. This mix suggests a strategy that aims to capture growth across various parts of the economy. Let's dig into some of the specific companies that make up this fund. The top 10 holdings are quite interesting. Credo Technology Group Holding Limited, Fabrinet IonHue Inc., Hims Hers Health Inc., Health Equity Inc., the Ensign Group Inc., Flu Corp., Blueprint Medicines Corp., AeroVironment Inc., and Brinker International Inc. each represent about a third of the fund's net assets. It's important to remember that even though these are the largest holdings, they still represent a small fraction of the total fund value. This diversification is a key part of managing risk. Now, let's dive into the actual holdings a bit more to see where the money is really being deployed. It's a long list, but important to see the granularity. In the communication services sector, they're invested in companies like Lumen Technologies Inc. with over 146,000 shares, and ATN International Inc. with over 1,500 shares. For entertainment, they have AMC Entertainment Holdings Inc., Cinemark Holdings Inc., and IMAX Corp., among others that give a good pulse on consumer spending habits. In interactive media and services, we see companies like TripAdvisor Inc. and Yelp Inc., which can be good indicators of online consumer engagement and advertising trends. The fund also holds positions in automobile component suppliers like Dorman Products Inc. and Goodyear Tire and Rubber Co., giving us a look into manufacturing and consumer vehicle demand. On the consumer discretionary side, hotels, restaurants, and leisure is a big area with holdings in Brinker International Inc., which operates the likes of Chili's and Red Rock Resorts Inc., a casino operator. Even in household durables, we see companies like KB Home and Taylor Morrison Home Corp., pointing to the housing market and construction activity. For leisure products, Peloton Interactive Inc. and Polaris Inc. are notable holdings showing exposure to fitness and recreational vehicles respectively. In specialty retail, we see Abercrombie & Fitch Co., Advance Auto Parts Inc., and Asbury Automotive Group Inc., giving us a view into retail and automotive service trends. Even in the more stable consumer staples sector, particularly food products, they have positions in Cal-Maine Foods Inc., which is a major egg producer, and Lancaster Colony Corp., which is known for its food items. The energy sector represents almost 5% of the portfolio, with holdings in companies involved in oil and gas like SM Energy Cowkey and Diamondback Energy Inc., showing their bet on energy markets. In the financial sector, the fund is heavily invested in banks with 10.4% of the portfolio dedicated in this area, including large positions in Ameris Bancorp, Associated Bancorp, and Axos Financial Inc. This shows a clear confidence in the banking industry. They also have significant investments in capital markets firms like Piper Sandler Companies and StoneX Group Inc., indicating a play on financial services and market trends. Interestingly, the IT services sector represents 0.5% with companies like ASG and Inc. and Unisys Corp in the portfolio. And in a hot sector like semiconductors, we see substantial holdings in Credo Technology Group Holding Limited and Analog Devices Inc., highlighting the importance of this tech component. Now, a really interesting part of a filing is related to securities lending. The fund holds a significant amount, around $17 million in DWS government and agency securities portfolio as collateral. This is essentially cash the fund has received for lending out its own securities to others. Looking at the statement of assets and liabilities as of June 30, 2025, the total assets stand at over $416 million, while liabilities are around $18 million, result earlier, and Bassett at nearly $398 million we saw earlier. The statement of operations for the 6 months ended June 30, 2025 paints a picture of a fund navigating market volatility. Total income was about $3 million, but total expenses after reductions were around $800,000. This resulted in a net investment income of roughly $2.3 million. However, the realized and unrealized gains and losses tell a different story. A net realized gain of about $13 million was offset by an unrealized loss of nearly $23 million, leading to a net decrease in net assets from operations of over the realized and unrealized gain of about $13 million was offset by an unrealized loss of nearly $23 million, leading to a net decrease in net assets from operations of over 7 to a net decrease. The financial highlights section really drives home the performance. For Class A shares, the net asset value per share decreased from $14.52 at the beginning of the period to $13.08 at the end. The total return was a negative 1.91%. For Class B shares, the picture was very similar, with a slightly higher negative return of 25%. This tells us that despite positive net investment income, the overall market performance for the fund's holdings during this period was down, impacting shareholder value. The notes to financial statements provide crucial context. We learned that DWS Investment Management Americas Inc. acts as the advisor and Northern Trust Investments Inc. as the sub-advisor. The management fees are around 0.28% with expense limits in place to keep things competitive. The report also highlights that Class B shares have distribution and record-keeping fees, which explain the higher expense ratio for that class. An interesting detail is the ownership structure at June 30, 2025, where 4 participating insurance companies held significant stakes in Class A. Shares with one holding a substantial 35%. Class B shares also saw large holdings by insurance companies. This concentrated ownership by institutions is common in the mutual fund space. Finally, there's a detailed section about the board's considerations for the advisory agreement. It touches on the nature, quality, and extent of services, provided the fees and expenses charged, and the profitability of the advisor. They compare themselves to a peer universe, noting that while their management fees are higher than the median, they have expense limitations in place to remain competitive. The board ultimately concluded that the fees were reasonable given the services provided. Now, looking at these results more broadly, the DWS Small Cap Index VIP Fund appears to be well diversified across sectors and holdings. However, the recent 6-month performance shows a negative total return, mainly due to unrealized losses offsetting realized gains. This highlights the inherent volatility of small cap stocks, which can offer high growth potential, but also come with increased risk. The fund strategy of investing heavily in common stocks with minimal allocation to other asset types makes it highly susceptible to market downturns, as seen in the recent period. We see a clear dependency on stock market performance for sharehold I Goffetefat Sexolf at stating realized gains. The significant holdings in technology and healthcare sectors, especially with companies like IonQ Inc. and Blueprint Medicines Corp., indicate a focus on growth areas, but also exposure to potentially high volatility industries. The fund's management fees, while noted as higher than the median, seem to be under scrutiny. Also suggests stable long-term investment, but could mean fewer retail investors driving demand. In conclusion, the DWS Small Cap Index VIP Fund is a vehicle for accessing a broad range of small cap companies aiming for growth. While recent performance has been impacted by market downturns, the diversification and active management of fees are points of strength. However, investors should be prepared for the volatility associated with small cap investing and understand that performance will closely track the broader stock market trends. Alright, that's our breakdown of DWS DWS Investment VIT Fund's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.